is going to be a lot of food for thought, for sure. And especially looking at the people here, the years of experience and the richness of experience that we have on the stage. We're going to be diving into some questions which are beyond the periphery, which are beyond the surface of women's financial inclusion. Just to lay the boundaries, so to say, women's financial inclusion, typically, when you talk about it, is limited to perhaps access. Maybe access to bank accounts, maybe access to payment products. But there is a big, rich experience of the woman and what happens to her household that we miss out on because we don't go beyond access. That's what I want to place in front of you today. I want to talk about pathways of women's access and continued usage of financial services because there's ample research and some of it that we published earlier today that talks about what happens when there is access, what happens when there's usage for the woman, for her household, and so on. Speaking of pathways, and before Pallavi, I will ask you the first question. For all of you in the room, we have an operator. We have a fintech and who's gone after solving for a very, very hard problem. We have a banker and one of the most favorite bankers amongst fintechs in India. We have somebody who's immersed in solving for women and solving financial services for women. And we have a pensions perspective because nobody ever has the time to talk about pensions while it is most important. We have Sumeet ji from PFRDA. So over the next 45 minutes to 50 minutes or so, we will try and pick on all of these perspectives and bring it all together. Pallavi, I want to open with you. And maybe if you could comment on what are these pathways of women's getting on board financial services, their usage, how does their experience shape up?
Thank you for that, Supriya, and thank you for inviting me here. Hello, good afternoon, everyone. So this is something that's this is an area that we've been working on for the longest time, and it's a wicked problem. It's not solved easily. Let me state that out clearly. There are some things that are common, and I'll focus on usage and quality using the RBI verbiage. I will talk about some specific pathways. In fact, there are 4 that we're currently working on, and it's a journey. But there is something common across these pathways to graduate women. From what we understand, there are broadly 3 things. One is the channel, and the channel is not just a way to access her, but really to engage with her. And how do you make a channel engaging? How do you make it make the channel such that it can explain the product, she can understand it better so that she can use it better? How does the channel plug into partnerships? How is the channel incentivized not just to sell, but for example, in insurance to process claims, so on and so forth. So that plays a very important role in making the pathway useful for her to help her graduate. The second one is, of course, the product. Now, let me tell you, the products, you don't need to change products for women. I think all of you would probably have understood that by now. But the products definitely have to be relevant to her in small ways. And they definitely have to welcome her. She should think, हाँ, ये मेरे लिए भी है. I can, this is a product I can use. So that's the second piece. And the third piece is really, how do you enable her capabilities to use the product? Even though the channel may be great, you have to do stuff even after the product is sold to her. So build her capability to actually graduate above and beyond. So these are some 3 common pathways. There are 4 common enablers. There are 4 pathways, in fact, that we are working on. And just so that I don't forget, the one is we did a lot of work on how do you move women from just owning accounts to then starting or transacting in accounts to then becoming credit active to then starting savings, small savings. So that is a journey on its own. And from there, you can move to RDs, FDs, and hopefully commitment savings products like pensions. That's a long pathway, but really relevant for women, and they're very willing to make that journey. The second pathway, of course, all of us are looking to work on is UPI. Like she might have a smartphone, but then how does she actually start onboarding onto a UPI payments platform, and from payments, how does she then start doing a lot of transactions so that she can get a relevant, a data footprint, and then of course, hopefully, Puneet will add on the credit part to it. So that's a second very, very important pathway for most women. This is not a very successful pathway for now. So there's a lot of work to be done. The third one is credit again. So group credit to individual credit. And that's a well-known pathway, but it's still broken. And I'm sure we'll talk about that. And the fourth one is insurance. Because we have the Jan Suraksha products. We even have JAY, which is not really an insurance product, but that is a great stepping stone to much more coverage and resilience. And so how do you move her from Jan Suraksha to other resilience solutions? So these are the 4 journeys that we are actively working on.
All right. And each of them have a different germination point.
Yes.
Savings, payments, credit, or insurance in this case. I want to ask and come to you, Harsh, and ask you from a bank's perspective, which of these pathways, and particularly, and when we were chatting yesterday, we spoke about a federal bank doubling down on 3 product categories, which is assets, liabilities, and insurance. From amongst these pathways, are you also seeing similar pathways of women getting on board one kind of product and then going across to others? Or are there completely sort of novel pathways that you've seen at the bank?
Thanks, Supriya. See, the pathway, the way we look at it is either you go from the asset side, which is borrowings. The other is from the saving side. Risk side is insurance. Whichever way you look at it, eventually the paths will converge. The idea is to be there with the customer, the borrower or the depositor throughout their requirement, because at one point in time, they may be borrowers and they start with that. To give you an example, we do JLGs. The whole group starts with the borrowing, but eventually after 1 cycle and 2 cycles, they start saving and they need something as saving products. Then you have something called SHG, the self-help groups. There it starts with savings and moves into borrowings. Insurance, if you ask me, and what she was also covering, Pallavi was covering, was there are enough and more products which takes care. And if I look at the entry level between Jivan Jyoti and Suraksha Bima Yojana, and I think they are extremely light on the pocket the way it's been designed. So it's a question of how can we reach out to the customer. So these are 3 products which we converge in. But more importantly, we also realize that if you are looking at the urban, rural, and you're looking at the bottom of the pyramid, it's not about the products itself. It's about the literacy levels also. So to give an example, what we do in Federal Bank is that we have 22 literacy centers across the country to make them aware about digital products, cyber crimes, all those kind of things, because that is equally important. And as in more and more we're moving towards digital, it's increasingly becoming important that they are aware of it. Apart from that, what we also realize that it's equally important, and especially for women who are coming into and borrowing mode, is skilling. So we have opened skilling centers across the country, which only job is to train the woman, and then it becomes an NGO, the group, and the bank. So it's a more wholesome approach to looking at it, instead of just looking at it as a customer for a deposit or a loan perspective. This is how we are doing it. But eventually, whichever way you look at it, the paths converge. And the idea is that you should be there in the entire life cycle of the customer, because we've seen, in fact, one of the things which we have been breaking our head on is the customer comes into JLG or SHG, and eventually, after a point, the ticket sizes become such that they are not served by the normal personal loans or the auto loan which is there, and and they are out of the MFI equivalent bracket. So we are looking at how can we ensure that the continuity is there. So that's the journey which we are doing.
That's, I think, a very, very strong point that you're making around the convergence. And the other piece that I picked up from what you were saying is extension beyond financial services. I mean, when you speak about literacy, when you speak about livelihoods, skilling, so there is almost that another layer that needs to get activated for financial services, and that kind of an engagement to be a rich engagement for the woman. That's a lot of food for thought. I want to come to you, Puneet, and I mean, as a company, because we've written a case on you, I can speak about this with more confidence. You've gone from savings to scores and now dabbling with credit as well and lending as well. So that's almost like a Kaleidofin pathway. Is that also replicated in your woman customers' engagement with you, or at least their interaction with you?
Uh, okay, so I have to kind of split it into two parts. There is a pathway that we think that a customer should have, right? And the pathway would always be that you have access to basic banking services, which means that you start to use a bank account, you have all the money available to you digitally. And the moment you do that, every product starts to look much simpler than what it can be. Right? Credit becomes simple, insurance payouts become simple, the data that is available to be able to underwrite credit becomes simple. And I think as a country, we are changing very fast. From a country where poverty was a big issue, I would say that poverty is still a big issue, but our poverty has changed to transient poverty. Most customers may be extremely poor in 2 to 3 months, where even nutrition might be a challenge. But we have very few households who are in continuous poverty now, right? Now, the moment that happens, a customer with even a 3 to 6 months of their expenses as in their bank account is a very strong customer. You can lend to them without any challenge at all. So, in theory, for any lender, for a customer to start with savings and banking becomes a very, very strong customer, right? So, that would be always my desired pathway for a customer. From the customer standpoint, though, this is a very different challenge altogether. One, today, a lot of our customers, and we are a developing country, which means that 85% people plus are in the unorganized sector. And this sector requires to make investments in their enterprises to earn a wage labor. So if I didn't have those two cows, there is no other income available to me. If I don't have the two-wheeler, I don't have a gig economy job available to me. And everything is unlocked by credit. Now, from this customer's standpoint, savings or insurance or pensions or whatever you call them, they start to compete with your own capital formation. Are you better off putting money in a 6% fixed deposit? Or are you better off putting it in your business, which otherwise you would have borrowed at 26% rate of interest? And if you are a wealth manager to this customer, you come to a point that perhaps even to make a recommendation to put aside a lot of money in liquid funds may not necessarily be in the best interest of the customer. Right? So at a customer level, a lot of this converges. A lot of this basically gets into a place where there is competition. And then to finally top it all, and this is not a commentary on where we are today as a country. I think we've made some very rapid progress on this front. We are not today geared to offer banking and transactional services to majority of the country. I know there are people who would say that UPI is out there. By show of hands, how many of you have seen anybody ever do a UPI transaction on a feature phone unless and until it was not a demo? Anybody? Another quick question. You go from your house to your office. If you're not in the business of running a BC, can you point out that you know where a cash and cash out point is? In this room, anybody? One. Very glad to know that. Now, I think the challenge really is that when you are talking about banking services, if you go to a place like a Kenya or Bangladesh, you will see 1,000 touch points which say cash in point, cash out points, and to be able to get rid of your cash is actually easier. I think as a country, we really need to focus on making some of this much more inclusive. Banking and transaction is about ease of transactions. I think we're not there yet. We have a lot of distance to go. I'm going to stop.
And I'm hearing at least some kind of categorization of pathways. There's a pathway of getting used to a certain way of transacting. There's a pathway of building resources first, and through that I get access to other financial services, or at least I build confidence in accessing other financial services. There's also that pathway of getting protected first, and then that's my first interaction and a fairly safe one with the formal financial world, and then that builds my confidence. That's how I start engaging with other product ecosystems. In none of this was pensions ever mentioned, and I'm sure you're not surprised about that as well. Sumeet, with you, I have two questions. One is, definitely tell us what is happening with the uptake of pensions, and you are, you have access to a lot of rich data, and especially around women getting aboard pensions as a product. what are you seeing as trends, and is there something that we can share here?
So thanks, Supriya, and thanks for the opportunity. I think I was listening intently to all the conversations, and I think the entire thing, only once the pension was mentioned in the elite panel. So that's the state of things. That's actually the state of things on the ground today. So in the if you were to fit the financial services into a financial pyramid, you would see the basic saving accounts at the bottom, which are the most in numbers, 50, 52 crores. Then you have the normal saving banks account. Then you have the credit. Then you have the insurance. Then comes the mutual funds. And last, the peak is the pensions. And most people have fallen off that financial pyramid by the time they reach pensions. And that's because we have a very low per capita income, for one. The consumption levels take up most of the funds, and very less is left out for the pensions. And even if it is left out, generally humans have a short-term bias. We cannot comprehend the long-term benefits even if we know them. So therefore, pensions do get to, be at the very last of our priorities. And that being said, the women are the most sufferers for it. And in case of India, it would not be an exaggeration to say that in few decades, the face of old age poverty would be that of a woman. It would not be an exaggeration. Why I say that is, you would know that in case of India, the longevity of women is slightly more than the men, at least 2 years. And in some of the southern states, it's even 4 years more than the men folk. And generally in our cultural milieu, the women tend to be younger than the men folk by at least 4 to 5 years. That's the average. So on and all, after the men pass away, the women have to fend themselves for at least 8 to 9 years. So if we have to look at the data, in 1991, the sex ratio of the general population was around 927, and for the older women, that is 60 plus, was around 930, slightly more, almost equal. Today, if we were to see it, it's 945 for the general population, and for the women who are 60 plus, it is around 1067. So there is a gap of around 112 points. So that's how the population or the demography is proceeding. And they have lost their spouses, so it's widowhood that would be there. So this is the stark reality of women that we are facing today. And if this population is not building their pension assets, how are they going to fend for themselves? I think that is the reason why in most of the states today, the governments have come out with schemes like Ladli Behna, or for women, because they probably do not even have the basic sustenance levels. And the reason is not far to see. In case of women, where does the gender disparity arise from? It arises basically out of 4 things. Number 1, health disparity. Number 2 is education disparity. Third is the financial inclusion disparity. And fourth is the leadership. So if we were to talk of education and skilling, we all know women are far behind men in education. They're catching up. Universal education is catching up, but your skilling is not there. And 33% of the women, as per one survey, never worked in their life. Never. So where do they have the income? And even if because caregiving is their primary responsibility. So if caregiving is the responsibility, they are not taught for the workforce. They are not ready for the workforce. Even if some kind of skilling happens, most of India is rural, so it's disguised unemployment or disguised employment. They don't get the money for it. And then even if there is skilling, they have interrupted careers. So interrupted careers means for childbirth, for caregiving, for lots of reasons, they give up their careers. So there is no persistency in savings. And the sum total of all of it is women end up not saving. They save much less, and let's not talk of pensions. So unless we do something, unless we have a targeted approach to this gender disparity, starting from their skilling, their education, their health, and developing a caregiving economy where we have something, some institutionalized mechanism where caregiving is not just on women. They can go out and earn. We will not be able to build a pot for the women to fend for them 2 or 3 decades down the line. Yeah, so in PFRDA, we have various schemes. The basic structure is NPS. On NPS, the best part of NPS is it's status neutral. So whether you are employed, unemployed, whether you are from one geography, other geography, you are in one vocation or the other vocation, you can continue over it. So that's very, 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 very partial towards women, I would say. And so in our case, we also have APY, the Atal Pension Yojana, which is our financial inclusion product. And I'm very happy to say that 47% of the APY accounts belong to women. On the other hand, it's again surprising that NPS, where we have the corporates there and we have the all citizen, since that is linked to employer-employee relationship and it is reflective of the women in the workforce in the organized sector, the uptake is only 24%. So it's the bottom of the pyramid where banks are doing very well, I must say. It's because of the banks that we have more than 7 crore accounts of APY, out of which 47% are for women. So that's the position today.
I do want to ask a question to both you, Sumeet and Harsh, as to what would it take to drive pensions up that priority order? I mean, both from a regulator's perspective and a banker's perspective, but maybe the regulator's perspective first.
Sure. Thank you. So I think awareness, first of all, longevity awareness. We need to be aware that longevity is increasing day by day and we have needs after that. So we have only 10% of the population which is above 60 today. It will go to 20% by 2050. So longevity awareness and pension awareness, that's the first prerequisite, number one. Secondly, developing products which are flexible and provide adequacy. So if we are to market a product saying that it's a 35-year-old product, people generally tend to withdraw. What they're not willing, they're not persistent enough to keep that money for 35 years. However, if they have the assurance that you can withdraw whatever little for example, you can withdraw up to 25% in NPS. That gives them the flexibility, and that's extremely important for people at the bottom of the pyramid because they are fending for themselves on a day-to-day basis. So if they know that they are able to withdraw 25% of their contribution, then they know, okay, this is a pot which I can save and also access. And then in NPS, what we do is we have a tier 2 account. So whatever extra you have, you park it there, get the returns of mutual fund and withdraw it whenever you want. So that's the flexibility that is provided. It's inbuilt in the design. So I think the products have to be designed in such a way that the uptake happens. Number 3, I think technology plays a great role. It can be leveraged. Fintech, of course, has to be there. Then simplification. In APY, why we were able to garner 7 crore accounts is you simply have to have a simple bank account and a very one-pager form, and you don't have to do anything if your Aadhaar is already seeded into your bank account. That simple filling of the form really helped to uptake around 7 crore of these things. So simplification even in fintech. I think Deputy Governor today talked of the experiences which are simpler, the interfaces which are simpler. So I think simpler interfaces on the applications of fintech would go a long way. And then use of language, AIs. Bhashini is one of the softwares which can be tapped into. Then you can have I think the fintech, the best use is scalability. In fact, last week we held a awareness campaign for the UPS for the paramilitary forces. And in one go, we were able to reach out to 40,000 subscribers, one go. And they were at the remote corners of the country. I think that is the scale that we can, reach with the fintech. So fintech, but within the presence of law, whether it is KYC, PMLA, digital data protection, consumer protection, all that has to be done within that presence. but fintech can play a great role. And last of all, the last point is it has to be a focused approach. I think most of you would be aware that in the last budget, the Honorable Finance Minister announced the pension forum, in which there has to be a coordinated effort across the regulators, across all pension providers to come at one forum and have a focused approach to have a pension society by 2047. I think that would go a long way.
I think she covered by and large quite a bit of it, so that makes my job easier. But yeah, I think 2-3 things which clearly stand out is one is awareness. I think that's something which people need to understand, that this is, I think insurance in India is sold largely for, as it used to be, a tax benefit or the saving product, not a life cover. Similarly, a pension product is again looked at it. So the moment you make it that, okay, in the short term you can withdraw a part of it, although it has pros and cons to it because you don't want it to be withdrawn also because it's supposed to be for long-term purposes. That's one part of it. Second is, I think awareness, and I would think that because from a banking point of view, the way we look at it, the incentivization for distribution channels has to be there. Now, we experience that even in the banking system, that those customers who opt for APY, the balances in their accounts were actually higher, which is the quality, the incidental benefit of doing this. So that's the other part of it. The third, very clearly, is the convenience and the ease with which we do it. And I would probably urge fintechs because I think they bring in more creativity and more thinking, unlike banks who are supposed to be more bureaucratic and more steadfast and other things. But it has to be intuitive. It has to be convenient. Like many people earlier would look at debit and credit in a bank statement. To a layman, they don't understand that. Today, it's red and green. Even to a less educated person, it's intuitively clear. A red means something which has gone out, green which has come in. So something which is as simple as that and as easily accessible as on your mobile is what we need to do going forward. And the moment we make it more intuitive and self-driven, it becomes that much more easier to reach out to that many more people. I think that's what we need to do.
Very, very interesting. And if I can ask you a follow-on question, which is linked to what you were saying earlier, just deepening your presence in rural markets, either through the literacy centers or through your agent networks. Are there any specific patterns of usage that you're seeing there? Are you seeing certain products being better suited to rural markets? Are you seeing certain solutions being better adopted in rural markets from a bank's perspective?
Yeah, so actually many of the products which we have designed, in fact, just to share a few data points, we have about close to 1.5 million borrowers in the microfinance portfolio between SHG and GLG combined. 99% are women borrowers. And I would think 95% are actually rural borrowers. So to that extent, it's more custom made for those people. And you'll be surprised the kind of things which we come up with. And actually, it's very interesting. There's one lady who came up to buy a mobile phone. And this was about years back, not right now. And the first question comes up is, why would somebody go and buy a mobile phone? You realize that how innovative they can be. He said that I want to buy it because there's no phone booth next to my village where I stay, but connectivity is there. So people don't have to travel 10 kilometers to make a call. I charge them 2 rupees per call for a minute. And then she came to buy the second one. What I'm trying to say that they are a very innovative lot, just that the moment you give them access. And our experience with women borrowers has been far better than men borrowers. So that's something which I must say that are typically, and we've seen that across the industry, the collection efficiency is over 97, 98%. So one thing is very evident that if you look at financial inclusion between the SHG, JLG, it is better suited for the rural. Another couple of things which comes out very interestingly is that this economy, thanks to UPI, is moving more and more towards formalization. If I'll just give you another example, after a game of shuttle, I had gone and stopped to have coconut water. And this was about 2 years back. And I wasn't carrying my wallet that time. I said, can I? He said, no, you can make a payment by UPI. And I got around asking the question. The good part was he used to sell, this was a guy, Amir, he said that about 10,000 rupee worth of sales he does on a daily basis. Then my next question was, to what extent is UPI? He said about 7,500, 8,000 is UPI. So I was quite pleasantly surprised. The third question I asked him as to how do you fund for it? He said he takes it from a wholesale vendor in the morning, about 50,000 worth of coconut, and in the evening he gives it back to him with a 500 rupee interest, which is a 50 rupees interest, which if I annualize it, is coming to about 400 odd percent. So the question was about the ease with which you structure a product for them, and UPI has come in a significant way in terms of getting information out. So for us now to customize a product is significantly easier. So for the JLG, SHG, you have weekly collections, you have monthly collections, which suits you. But if you were to look at it in the urban side, they would prefer a monthly repayment, more structured EMI, right? So these are things which we have kind of come across, and JLG, SHG as a product is widely accepted now. That's where we are at this point in time.
Awesome. Puneet, I wanted to, and because you're talking about small ticket loans, and I know that's been a part of your thesis, that there are small ticket loans and then there are larger ones, but there is also that missing middle. Are you, and what are you seeing with women's uptake of those missing middle kind of loans?
Okay, definitions first. I think the small, medium, large is like a matter of perspective. When you look at MSME definition, the micro is like 1 crore or 5 crores or some such thing. So when we talk about bulk of our population, maybe 85% of people that I keep talking about in the informal sector, the demands are much, much, much smaller. A lot of these are very much backyard-based businesses where the capacity to absorb credit is not significantly high. But if you look at the Indian context largely, two kinds of loans have really taken off. One is the group-based lending, typically micro loans, very process-driven loans. Entities rely on the fact that if you can form the group well, money will come back. And over a period of time, I would say that this principle is changing quite dramatically. The group processes have become weaker and weaker. And to my mind, the group models are starting to kind of come to an end of their life at this point of time. Not to say that they are not still bankable, they are. But it's high time now for customers to be treated as an individual, and we should by now be able to start to write at least customers who have a history to take individually. That's one part. This is micro loan, typically sub 50,000 rupees. The next spectrum of loans are largely some kind of a collateral based loan. It's either a gold loan or it's a loan against property. Again, from a provider point of view, very process driven loan. So as long as you know how you can appraise gold or how you can appraise the property value and repossess the property, you're willing to give loan to a customer. The underwriting of the customer is not as strong. Again, mostly process driven work. And I think this is the entire segment where we said that we need to make a tangible impact to say data today can actually supplement this entire process. You can actually move away from group lending to individual lending, and you can move from secured to unsecured loans, especially for loans up to, let's say, 500,000 rupees or even $1 million. You may still start to think about a collateral, but that's much more to take care of moral hazard, as opposed to it being the primary reason for which you give a loan on. And I think when we talk about the middle in our definition, it's basically the segment which is from 50,000 rupees to 300,000. And I would say that that's a very hard segment for most people. The size is still very small. Economies that people are operating in is still largely cash. And the more you go towards the rural segment, it becomes more and more cash business at this point of time. Physical collection of cash becomes important, which means that the cost of cash collection is extremely high. And I think this is the segment which has been the hardest to serve. And this is also the segment which keeps undergoing very significant policy changes in others. For instance, most recently with the new microfinance guidelines, a customer who was getting serviced with maybe 30 MFIs in their district today is suddenly not serviceable by any of these entities simply because of the fact that their income has gone above 25,000 rupees. And a reminder, microfinance institutions were supposed to give loans for income generation. So if they succeed in increasing the income of the customer, they lose the right to service this customer. But from a customer standpoint, this is a big shock now, right? Today, I can pick and choose the best vendor, the best provider, the best microcredit organization, and on the next day, I have no access to money at all. So I would largely say that for this segment, the entire process of getting credit has always been very broken. There are times of good credit where 30 organizations are willing to give me loans. And there are times like today where not a single lender is willing to come and give a loan to these entities. Not a single one. And not a bank, not a cooperative bank, not an RRB. And when we build our financial life, for example, I live a very aggressive life, right? The moment I get my savings, whatever my salary, I put everything into a mutual fund account and I live off a credit card for the rest of my month. Next month, when my salary comes, my credit card bill gets paid. But imagine now that I didn't have that credit card suddenly, right? The shock of that entire thing, non-availability of that credit can again completely destroy my life. So I think a lot of our customers continue to be there still. What Kaleidofin is trying to do largely is to make sure that we start to iron this noise out. So today, in a high delinquency environment, in a situation where cash is becoming harder to reach, we are still able to go back to our NBFC and bank partners to say, this is a customer segment that has shown resilience across multiple shocks in the past, whether it was demon, whether it was COVID, whether it's even continuing now in the current shock. And you are actually going to be fine if you're lending a certain amount of money to this customer. And we follow the customer. So if a customer doesn't need the 100,000, sure. Because again, the entrepreneurial abilities of this customer are largely coming because of the absence of choice. Nobody had wage labor. People are forced entrepreneurs. Some people will top out by saying, I will never take a loan of greater than 100,000 rupees. So if you need 100,000 rupees, we will follow you at 100,000. But if you need a million, we'll follow you with a ₹1,000,000 loan. So that's largely the philosophy.
All right, I'm looking at the clock as well. I maybe have one question for both you, Pallavi, and Puneet. We've spoken about pathways of women accessing and getting aboard formal financial services. Both of you either have done research on servicing women or have served women as your biggest customer group. How do you not service women? Let me ask you that.
Yeah, so I know I'm sitting in the midst of fintechs, but actually, just using technology is not the best way to serve women. That's the honest truth. See, technology has to be used to solve a problem. So if it's affordability, then technology has to be used to make it affordable. If it's ease or of using a product or simplicity, then technology has to be used for that. But what's most valuable right now is awareness. How do I get into a consideration set? How do I build her trust to use a product? And those are harder to be solved through technology and easier to be solved through human interface. So a combination of tech and human is frankly essential and not just tech. So that would be my biggest do not do. Of course, there are other do not do's. Like there is no single common segment called women. You have to, there are many, many segments. So you have to know your customer. There's a wonderful book that you have which identifies the various types of women customers out there. So it's definitely not one product fits all. So that's my second definitely do not do, and definitely do not pink wash. Like, just have an existing product and then give a processing fee waiver if you're a loan provider. It doesn't make it appealing to women. So yeah, these are my 3 do not do's.
Okay, very hard question. I would say that by default, I think we are in a zone where we are not serving enough women. I think this is not about kind of learning new tricks not to serve them. I also don't want to kind of make it sound more difficult than what it is. At least as a practitioner, we haven't found that when you go to serve women, you need to do something which is very different from men. In fact, I would say that at least in the financial inclusion space, it's been easier to work with women. And most people will kind of talk about that in a variety of ways. But access to credit for informal sector households has been constrained, whether you're a smaller marginal farmer or you are a woman customer. So I don't think it takes that special effort, which is beyond what you would do in any case. The big difference that I see is that in many cases, and we were kind of hearing ma'am talk about the kind of places where differentiation happens for women. One thing that we have to realize is that when it comes to technology, the ownership of technology for women is going to be the last. So when a smartphone comes, it's more likely that your teenage kid will have the mobile phone first, your spouse will have the mobile phone second, and you might get a handed-down phone at some point of time in life. That's one. So if you're building too much around technology, there are challenges. Asset ownership of women is always going to be complicated. Even when they have asset, control of asset is again going to be hard. So if you're thinking only about loan against property, that's hard. If you're thinking about loan against gold, you know that the spouse and your mother-in-law and other people around your household may have a very significant say on the gold which rightfully belongs to the woman. And therefore, again, there are going to be challenges on that front. The third thing that we would also kind of point out is that when you're thinking about channels, a channel where you are expecting a person to take too many steps, going to a physical touch point is always going to deter women more, because mobility of women in many places is much poorer. Places like Tamil Nadu are great, but there are many other places in India where mobility of women is extremely, extremely complicated. So if you're designing not keeping in mind the social considerations of a woman, I would say that that's going to be a challenge. Having said that, men in same geographies don't have a much better access to credit. We have to start to think about the fact that we have a very large number of people who are low-income households who are bankable. It starts with that change. There's a lot of data to back it. We just have to start thinking about how do we use it.
Works. My closing question to you, Harsh and Sumeet ji, as a banker and as a regulator, I hope that you'd like to partner with fintechs. And if you do, what would you like? What would your expectations be from fintechs? What would you like them to bring to the table for you to be open and engaged in a partnership?
So I think I spoke about fintech just a few minutes before. So in case of regulators, I think partnering with fintech is important, and some of the regulators like RBI and IRDAI already have a sandbox approach, so that generally the innovation is one step ahead of regulations. Regulations need to catch up. So therefore, they have this approach of having a sandbox wherein you can test your product, and then if it is found viable, and within that, they even go ahead and change their regulations to help out the innovation. So that's a very good way of doing it. In case of PFRDA, what happens is our NPS as a product, which we are regulating, is codified in the Act itself. So we cannot give a leeway to what is approved by the Parliament. So therefore, we do not have that sandbox approach. However, we have a CRA or a record keeper which is technological based, and therein there could be some apps or fintechs could look at some areas wherein they could coordinate with the CRA, that is the technological backbone, and see how experiences could become better. And the outreach could also be there. The most important message for the fintechs for me is please make pensions prominent on your apps. I think that is the basic thing you could do. I never see apps which have pensions or NPS or APY or any other pension product, which is, actually prominently displayed. That is the simplest thing that you could do. And then the fintechs have to expand throughout the value chain of the financial services, whether it is literacy or whether it is maintenance. Persistency is a very big issue in case of pensions. People are onboarded, but then they fall off. I think APY, you must be aware, it's only 55%. So the outcome is not what is desired. So persistency therein, tracking down that individual and getting those and making it easier for him through those apps or fintech could be one of the reasons, various ways in which you can collaborate with us. And but you have to stay within the law. That's very important. As a regulator, I can never emphasize that more digital data protection is important, and then privacy is important, and then KYC and PMLA is important. Stay within that. Yeah.
Yeah, no, I can't agree more. There's been always a constant debate. The two things which you've always been seeing. One is fintech versus bank. I don't think anybody talks about it anymore. It's a symbiotic relationship. One can't do without the other. The second debate which goes on very increasingly is regulation versus innovation. And we all realize there has to be a fine balance between it because you can't ignore one for the other. You can't stifle innovation because of regulation. At the same time, you cannot care to who's about regulation either. So that's something which I think fintech is also coming to realize that this is an important integrator in our journey with fintechs. The initial part was there's a lot of question around bureaucracy as to why banks are taking so much more time, and it had to do more with that we are regulated entities, and that is what we bought in. So we are looking at innovation significantly more from the fintech partners, and these innovations can be bought by simple tweaks. Actually, a daily debit, auto debit is enough to cater to a certain segment of borrowers. So that's innovation. Complying with regulation is one of the foremost things. The second part, which we are increasingly looking at fintechs, is the user journey, the user experience. If the UI UX is taken care of, which I do believe intuitively they handle this significantly better, it's something which we can work on. The third part is, in some sense, we would like to have fintechs to get in a newer set of customers, and not just the customers who are already banking within the banking system, where there's deeper deeper geographies, whether it's a digital journey completely or an assisted journey. But onboarding new kinds of customers is something which you would look at fintech partners for. So these are the broad 3-4 areas which we expect from fintech.
With that, thank you so much for joining us today.